What's going on, guys? It is the end of the sixth week of investing for the year, and I got a haircut. This is where we're going to basically check in on what happened last week, what's going on, and go over some key metrics. So I'm going to dive into our tracker and let's see where we are up to date. All right, guys. So this highlighted blue line here. Today it is February 10th of 2023. Again, it is Friday. For my weight, right? I don't know what my weight is right now. Didn't weigh myself. I was on a bit of a vacation for the week. Did some snowboarding. Trying to teach Jaden, my son, how to ride, which was fun. Doing some activities. So I didn't weigh myself. And yesterday we decided it would be a good idea to eat ice cream and eat Uno's deep dish pizza and all that stuff. So didn't weigh myself, didn't get around to that. But hopefully it's like that 285 range. That's kind of my expectation of myself. I don't know what my total weight loss is right now, but we'll get an update for that on Monday. My investment balance, though, we're at $1,841.95. So total investment balance, that's a really good number. We're approaching $2,000, which is a very rapid growth and kind of an exciting number to see. $2,000 is a pretty good chunk of change. Dividends earned. So we did get a payout from JEPI and JEPQ, which brought us to $4.92 for our total dividends earned on this portfolio. Those went right back into buying additional shares of JEPI and JEPQ. So hopefully we can get that dividend snowball effect rolling where those dividends buy stock, which pay dividends, which buy more stock, and it grows a little faster. So cool to see that. Total growth. This is something that I am stoked about. We are down $22.44. Now, remember, this account did start all the way up top with a negative $30 balance because that's what I had lost in previous trading. So we're still up, but I don't care about that. I care about the market coming down. We want to get these really good dividend paying stocks for as cheap as possible. And part of getting cheap stocks is they must come down. Dollar cost averaging, that's what we're all about here, is very effective when the market is coming down. So it's good to see the market is in fact coming down. So YouTube income, we are at $0 still. This is a grind. All right. Getting a YouTube channel to be a paying YouTube channel, it takes a long time, especially when you're on vacation. You don't really do that great a job of making videos. Although I did make a video that I'm really proud of about the beginner's guide to dividend investing. I worked really hard on that. It came out yesterday. So if you do want to get a better grasp of what I'm talking about in these, I'll have the video linked at the end. Total subscribers, we are at 1,247 total subscribers. Again, didn't really post that much during the week. I put up a couple shorts, which were fun. Got some views there. One of the shorts was about Pepsi's new dividend, which is exciting. We'll talk about that today. So that got some viewership, but aside from that, I really did take a vacation and I tried to post and stuff, but I wasn't as good about being on the channel as normal. But our total views is still growing, which is awesome. So we're at 54,027 total views on the channel. Everybody, thank you so much for that. I really do appreciate that. And our total watch hours actually finally kicked over 1,300. So we're at 1,305 hours of watch time. The reason why watch time is important, guys, is because when I hit 4,000 hours of watch time, as long as that happens within the year, I will start to earn YouTube income. So, that's a grind, but if every couple days we can pick up 20 hours of watch time, that's, kind of slow, but that's okay. We're working on it. We're putting videos out. And again, I am kind of proud of some of the videos I put out that haven't really been watched yet, but um, that's where we are on the channel tracker. All right, so just popping over to SoFi Invest really quick. This is where we are investing. We have automated investing set up on SoFi so that every Monday, Tuesday, Wednesday, Thursday, and Friday, we are buying $50 a day, broken up across a couple different stocks or funds. And here's the first time that we've really seen the market affecting the shape of this chart. I don't know if you can see this angle right here, but we went from down $9 on the week, down $19 on the week, down $39 on the week, and then down only $20 on the week. So, the market was kind of all over the place, which was definitely exciting to see. It's always kind of scary when you have a short-term investing mindset where you're more trading, right? Where it's like, hey, I need to buy this so that I can sell it. That's not the goal here. The goal here is to buy as many shares of stocks and funds that are going to pay us out over time so that when we retire, I never have to sell off shares. They're just going to pay me checks monthly. Or quarterly, depending on what it is. But that monthly income is going to be there. So I don't really care about the market fluctuation. In fact, I want to buy things as cheap as possible. So that's why I'm welcoming the downturn. So, that's part of, as I mentioned earlier, we talk about it a little bit, but dollar cost averaging means that by buying it every single day, it gives me the opportunity to get a better deal on the stock as the market goes down. So on this day, February 9th, when the market just like tanked 2%, I got 2% off of my future that day. That's how you got to look at it. This is a 2% savings on the rest of my life for that $50. Because I look at it like that, I do think it's really exciting when the market, comes down. But we're still growing. If the market can just come down slightly slower than we're contributing, this chart will always go up. Here's the month chart. It always goes up, which is great, even with these little downticks. So we're down $12 over the past month, which is okay, right? We're moving in the right direction. This wealth building chart looks great. Here's that $4.92 of dividends I was just talking about. We have the total balance up here and our total gains here. Now, one thing that is interesting about the dividend payout is our total market gain, or in this case, loss, is actually $27.36. So we've actually lost more than what's represented here. And that's because we've been paid this $4.92. So if we didn't receive these dividends, we'd actually be worse off than we are, and we'd have nothing to show for it. At least in this case, we have almost $5. But let's take a look at Seeking Alpha. I was doing a little investigation on stuff before I started the video, but and let's take a look at what we got for shares. First we have MPW with 11.88 shares. The price has really come down on this, which is okay. The dividend yield just looks better. But at $12.09 a share, it's back to paying almost a 10% dividend. So we're looking at getting $1.16 over the next year, which didn't change, right? And that's the beauty. If I'm going to get paid $1.16 for the rest of my life every year, I would rather pay $12.09 for that, right? Or luxury, I should say, as opposed to $13 for that luxury, right? It's a better deal. AT&T. So AT&T, we have 7.72 shares, priced at 1907, still up year to date, but it has come down a little bit. It spiked up to the like 21, 22, come down a little bit. So we're getting that at a bargain. The dividend yield looks a little better because of that. JEPQ. So JEPQ, right? This is something that we're not investing into daily. We had 5 shares at the start, But what is kind of cool is we got our first monthly dividend, right? And the monthly dividend of this pays basically 1% a month. So what do we have now? We have 5.05. So we got paid 1% of a share of JEPQ, which is awesome. So that's really cool. I love seeing the growth there. This is still up. It's just kind of hovering around this like 42.50 to 43.50 price range, just kind of sitting there. It's a new fund, so a lot of people are looking into it, kind of testing it out in their portfolios. They know it's cousin Jeppy, so there's a lot of traction behind it, but yeah, we're all kind of just watching to see what happens with this thing. So, Realty Income Corporation. This has been a huge mover up and down all over the place, and it's pretty fast paced with its movements. But we are at 4.54 shares of that, currently priced at $66.85. That dividend is very close to $3, and it does pay monthly. So, on the 15th, which is coming up, we should get our first dividend payout from Realty Income. We only had about a share at that time, but it will be good to get that payout. And next month, that should be a lot larger because we have actually like a decent little chunk there. We have over $300 in Realty Income at this point. So that looks great. SCHD. This is one that I wish would go down, and it's just kind of hovering at the same price. I'm okay with that. But we are at 3.91 shares. SCHD is Charles Schwab's dividend ETF. Currently hovering around $76.80. It's been that the whole time, basically. It's gone up, it's gone down, really relatively uneventful. If I bring it over here to our year-to-date performance, it's up 0.74% on the year, and that's after a 0.92% gain. So again, before today, it was down 0.2%. Now it's up 0.7. It's just kind of stagnant, and that's okay. Like if there's one to be stagnant, I guess it's that. Jeppy. So Jeppy is kind of like the cousin, as I said before, to JEPQ. Basically, we've got 2.74 shares of that. It's hovering around the same price of $54.77. As tech stocks kind of fluctuate, so does Jeppy. But it's doing what it's supposed to do. It's paying out monthly dividends. Realistically, between Jeppy and JEPQ, that's where our big bump in our dividend payouts have come from. NASDAQ, this has come down a lot. So we're at 2.31 shares at $59.62. So part of me saying that this has come down a lot has nothing to do with this YouTube channel and everything to do with I actually hold NASDAQ, quite a bit of it in another portfolio. So it's something that I've monitored for a long time. And I'm wondering how well it fits the portfolio. I think it does fit this portfolio to a degree, right? But it doesn't really pay the dividend that I'd like to see. Paying a 1.36% dividend, is not stellar. I think it's a little overvalued. I do think it's coming down quickly, so I think we'll get it at a good value, and this dividend will be better, which is why I still have it here. But it's not something that we're investing into daily, so this will kind of separate itself out. Let me know in the comments, guys, what you think about NASDAQ in this portfolio, or should I just pump it into JEPQ, or potentially a new option that I found that, is something I'd be interested in tracking in this portfolio just to see how it goes. Because I found a new fund that is pretty interesting. I was reading a lot of stuff on it. Good dividend yield, but high management fee. Kind of an interesting fund there, but let me know. Would you rather watch NASDAQ in the portfolio, or would you rather see that go to JEPQ, or even a new fund that really no one knows about? So throw that down in the bottom. I'd like to know. Procter and Gamble. I am so stoked with how terrible Procter and Gamble is doing right now. It's awesome. So we finally have a full share of Procter and Gamble, which in its own right is pretty cool. We're at 1.03 shares of Procter and Gamble, and that's priced at $138.26. This is a steal on the dividend, and I think it's going to keep going down, which is just better and better. So if every day I can buy, a chunk of this $3.65 a year for just a little bit cheaper, a little bit cheaper, and a little bit cheaper, um, I'm totally in. So we're down almost 10% on the year to date, which is great. And the reason why I feel so good about Procter and Gamble coming down is because they have steadily increased their dividend every year for the past 66 years. That is so long. Like, I'm really, really excited to see this price come down because I have zero doubt, like 0.5% doubt that Procter and Gamble won't pay a dividend. It's just too good of a streak to really even consider that may happen. Now, obviously, nothing in life is guaranteed, but I think the probability is quite high of that. So, yeah, very excited to see that coming down. I'm looking forward to it coming down. I'm going to make a bold prediction and say that by the end of March, it'll be at like 120. I'm going to say that, or it'll tap 120 by the end of March and come back up a little. I like the 120 number on Procter and Gamble. But we will continue to buy it $5 a day every day that the market is open. Pepsi. So Pepsi was down, right? We have 0.86 shares of it. Pepsi is back up to $176.20 a share. Still paying a good dividend. Again, they've been paying a dividend for a really long time, and we have some time to build this up before March when they do their snapshot of what they're going to pay their shareholders. So here is what's going on with Pepsi. Pretty exciting stuff. A couple things. First, they were down like 6% year to date, and then they had their earnings call. And in their earnings call, they had a lot of good information and said some pretty exciting stuff. First thing that they said, which is not reflected in these numbers, is that in June they will be increasing their dividend by 10%. That is a great number to see. They haven't posted that yet anywhere. Well, I mean, it's in their call, but so a 10% increase to their dividend payout means that this forward dividend rate is going to be higher. And that's a great thing for future investors. It's a better thing for current investors. So, not only are we looking at getting paid out dividends on this in the near future, at the end of March, but we're also looking at them increasing how much they're going to pay us in the future. They've announced that they're dedicated to paying that increased dividend, and they said that that's their primary focus. I also finally tried f.i.r.e soda, and I personally think it is better than Sprite. I think it's delicious. They make the zero sugar one; it tastes fantastic. That's what I've been drinking actually. It's really really good. So if you like diet sodas, it's really good actually. I would recommend it. I might go grab one right now. This video is not sponsored, by the way. And then lastly, BlackRock. All right, so BlackRock, we have zero point 0.2 shares, guys. Look at that. We're a fifth of the way to an entire share of BlackRock. That's kind of cool. Right now it's trading at $723.51 a share with their recently announced dividend hike to $20 a year. The dividend forward yield rate is actually getting to be a little higher than it was when we started this whole thing, making this look even better. There are some questions there with the valuation, and is it valued too high and blah blah blah. And look, I personally like BlackRock basically owns the world. They're gonna do pretty good, I think. But that's a whole different thing. Do your own research. I'm not a financial advisor, wealth manager, credit counselor, none of that. I'm just a guy in a triangle shaped drum, but BlackRock looks like it's pretty powerful to me. So that is pretty much where we're at finishing out the week. All right. So with all of that stuff said, just pulling something up here for me to read really quick. We'd gone over last video on Monday that my average dividend yield for the portfolio was 5.51%. So just to kind of put some evidence behind why I'm excited about the market coming down, which sounds very counterintuitive, but this is how it works. My current dividend yield average for the portfolio is now 5.73%. So I've gotten a 0.22% gain in my average dividend yield on the portfolio based on how many shares of everything I own at their current price with their current updated dividend yields due to the market, again, coming down. With that, and with the additional contribution over the week, we now have $105.35 of dividend payouts per year if we were to never invest again based off of the current dividend payouts. So that's pretty awesome. Again, it's nice to see those numbers side by side because as the markets come down a little bit, right, our average dividend yield has gone up a little bit, right? So we're buying things at a cheaper price. We're still getting those same dividend payouts as long as the companies still pay those same dividend payouts. But we're in companies that should. So it's cool to see like that growth rate's really quick, and that's not happening necessarily only because the stock dividend payouts are growing. It's also happening because we're able to buy more shares of those stocks with our same $50 a day. So hopefully the market will keep coming down. That way we can build our overall wealth for the future. And with that, I say I wish you all happiness, health, and wealth. Roll the outro.